Hi everyone, so we're going to be looking at the consolidated statement of profit and loss, which is a common exam question and one that you can get lots of easy marks in if you know how to do the pro formas and know how to treat adjustments. Okay, so consider this example. I have a group. A is the parent or the daddy, papa. B is a sub, and C is an associate. Okay, so A has 80% ownership of B, and A has 30% ownership of C. Okay, so for statement of profit and loss, it's very simple for a group. So you have your parents and the subs along the top. So these are parents and subs. And for the subs, you're adding 100% of the revenue and the expenses in each line on a line-by-line basis. So you do 300 plus 400, that gives me 700. 200 plus 250 gives me 450. Now, you must leave enough space between each line of the statement, especially where expenses are being recorded, because you might have adjustments between here and here. And you have to allocate adjustments to entities sometimes, because that's going to impact on your equity figures. Okay, so this is what a basic statement looks like. It's not too different from a single statement, but there's one thing I haven't included. Now think about it. This profit after tax, who's it going to? Well, it's going to two sources of investors. It's making two sources of investors richer, you could say. Some of it's going to have to go to owners of the parent. Most of it's probably going to go to owners of the parent, but a portion of it's going to go to the NCI of subs. Okay? So the owners of the parent, that amount is going to feed into your retained earnings on the balance sheet, and it's going to increase your retained earnings. And this figure is going to feed into your NCI equity line. Okay? Now let's see how to work this out. Let's rub that all out and let's understand how to work these figures out. Okay? Now let me show you how it's set at the pro forma for this part. So you have profit due to NCI. And then what do you have below? You have profit due to owners or parent. And you have a total balance here. And what's your total balance going to equal to? Well, my total profits are 235. After all the working, so I'm going to have 235 here. Fine. Okay. Now, where's the NCI actually arising? Well, A has 80% of B. A has 80% of B, so NCI has 20% of B. And notice how I put 80% at the top of B, so to remind me of the allocation of share capital. So of this profit, okay, 20% times 127 is going to go to NCI, and 80% times 127 is going to go to the parent. Is going to go to owners or parent, who might be high net worth of individuals, you don't know. Okay? So the profit due to NCI, in this case we can work it out very easily because it's only due to B. It's going to be 20% times 127, which is 25.4. So then our profit due to the owners of the parent is a balancing figure, and that's the same as 235 minus 25.4. Okay? Now, this figure you can calculate through another method, but it's much more long-winded. What you could actually do is you could also do the 108, which is due to the parent, plus 80% of the 127, and you'd get the same result. This result 1 would be the same as result 2. So 2 is actually the easier method to do. So it's easier to work out profit due to NCI and then this figure. Good. Now there's one thing I missed out, which I think is important to explain. So associate is very simple. Associate, as we know, we're only entitled to a percentage of profits. So if in this case, imagine if C is making a profit of 100k, we record a share of 30k because our percentage share is 30%. Okay, so I'll write down how I'm calculating the share of profit. So I do 30% times 100, and that gives me 30k, and I allocate that 30k to the parent company, which is A. Okay, so it's just one line in the consolidated statement. Okay, so it has minimal importance. We're not doing the whole consolidation shebang. And then that's it. That's all you need to know really at a basic level. But in the next videos, we're going to be looking at how to approach adjustments. Thanks everybody. Hope this video finds you well. Cheers. Bye.